if you want to be the first sale that happens in that condo, then you got to look at what do you have different. Okay, you got the CN Tower view. There's probably another 40 condos
That have that same
around that
view.
area that have the same view. Then what's the other factor? So your unit is not going to be unique. Unless it's unique, then you got to figure out, then
Upgrade.
you're going to be down to the pricing. So if you want to be the next condo selling, you got to be the best price and the best looking condo out the gate. Otherwise, you're just, chilling in the market for no reason. Hi everyone, and welcome to Reality Check, where we discuss what's going on in Toronto's real estate market and help you make informed decision buying or selling real
You
estate.
tweaked it a bit. Where it's going.
Well, I don't want to get sued, I guess.
That's actually pretty true. Yeah.
No, but again, when I say actually where it's going, what I mean is
Where we think it's going.
Because the stats are a month old technically. So
Yeah.
right now, when we're recording, it's a week into the stats because
Well,
the stats.
actually, it's not a week because you went on vacation. Now we're really late for this.
Yeah,
so
I
Justin,
know.
do your best to pump this out.
But oh yeah, Justin, please by the mid-month, hopefully.
Welcome
Yeah.
back, by the way.
Thank you.
You look good, well rested.
Yeah, I didn't get my luggage back. I had to trim my beard with actual scissors.
Hairdresser Nima.
It looked like Dumbledore. Literally, it was so bad. Now it's good though.
You look good, yeah.
Yeah,
You look good.
I had to trim it down. So yeah, the trip was good. Thank God I was gone because when I saw the stats, I was like, can't wait to be in front of the camera and talk about it.
Yeah.
Yeah, because these are some legit numbers we're looking at.
Here we are.
Here we are.
You know, when I got in real estate 10 years ago, I didn't realize that I was going to be in analytics. But
Yeah, literally, look at this.
but here we are.
I didn't even think I would be like talking about numbers, but actually one thing that goes with the numbers is our little coffee, because we cut down on the cost and we're actually making coffee these days.
Oh, recession?
Yeah,
It's hit us.
yeah. Listen,
hit us
like,
hard, guys.
no more
Cheers.
Starbucks. I mean, I kind of cut down on coffee altogether because
First
can't
of all,
even
I
afford
have
the
some
pods.
good Lavazza for you.
No, this is good.
It's delish.
Yum. Okay,
Wait,
so
I'm sick, so just forgive if I have little hems every now and then.
yeah, everyone's getting sick these days. But getting into the stats, so
Let's do it.
something interesting happened because we actually thought with the interest rates holding, things are going to pick up. But what happened after they held the interest rates, we had the inflation number as well, which right 2 days after they held the rates, they come on the TV and say, oh, listen, the inflation was high,
Went
so
up.
there could be another rate hike pretty soon. And I remember
Yeah.
I had like 2 or 3 people tell me the same clip.
Which one?
The one that someone from Bank of Canada said they could be raising the interest rate
Yeah,
because the
yeah.
inflation is still rising. So because of that, I think a lot of people are still holding their purchases. That's one
Is
reason.
that what you think?
I think one is that. The second thing is things are really expensive. I've been to
I
a
agree.
few listing appointments, and it's unfortunate because I think if you are selling and buying in this market,
Yeah?
it's good, especially if you're
If you're
upgrading.
upgrading.
Yeah, that's a really good time to be buying.
Agreed.
But if you're cashing out in this market, then
Oh,
it's
yeah.
not a good time.
Obviously.
And if you have to, then
You're leaving some money on the table.
especially with the stats that we're going to talk about, it's not the best time I would say in the last 12 months to be selling. We're going to go into it, but again, whatever we talk about is a little bit of a macro market. So even like we
An
talk
overview.
about, yeah, we talk about GTA, even when we talk about Toronto or Oakville, it's Oakville as a whole.
Do you remember when we said what the good deals were
Yeah.
in Oakville and how that recovered so quickly? So that's just something I want to touch on because when you buy a quality product or if you buy in a great neighborhood, and this is as true when selling pre-con, we tell the people the two things is builder and location. When you buy a quality product, you don't have as much issues moving it after, and it holds value really, really well and recovers really, really well. And just for an example, Oakville is a really good pocket that that happened in,
Yeah, Oakville picked up pretty drastically back
Yeah.
in April and May.
and
then,
hasn't come down so much either.
funny enough, the months of inventory has gone up, but the prices have stuck up, and we're going to talk about it
Yeah.
when we talk about the average prices. It's one of the areas that's actually still up.
Yeah.
And it's interesting to see why, because I feel like there's a lot of high-end homes that were trading hands, and that's because the average price is held high because,
Yeah.
we had a couple of clients homes that were well over 2 million are getting bought well below, like they're buying in the 1.6, 1.7s. So these things are holding the average price up. So people are coming and seeing these deals and grabbing these deals that once they were well over 2 million. At the peak, I think one of the deals that we did was hovering at 2.4. It's insane. So let's go into
We always go on a little tangent.
yeah. Well, let's start with Market Watch and see what's going on
Durham?
in
Sorry.
dear Lord, everywhere. So active listing is drastically high, and that's something that we haven't actually seen since probably I don't know, like I mean, we're looking at 2020 numbers right now. Like we have close to 19,000 active listings, so exactly 18,912. Last time we had close to this number was back in 2020, September. That was around 18,000. But the difference was back then we sold 11,000 of those homes.
I was going to say the amount of sales.
Yeah, right now we've sold 4,600. So that puts us at over 4 months of inventory. So I mean, we haven't had 4 months of inventory, I would say, since
April?
no, we've never had 2 months of no, like we have not
Oh, I thought
had
the 4 months. Sorry.
4 months of inventory. We haven't seen that since probably late 2017 when the market came down.
We had 4 months of inventory this year.
No, I'm talking about the TREB,
Oh,
overall
okay.
TREB.
'Cause I was
Not
gonna
in
say
the
we did
micro
have-
markets,
yeah.
but overall TREB, we haven't had it. So, I mean, each area is going to be different. Some areas have well over 4, some areas are still below 4.
Or below 2.
Or yeah, so that's something we're going to look at, and that's why when you see something selling quickly, you got to ask yourself what's going on
This
there.
is an isolated incident.
Yeah.
I'm joking.
So don't get
He's
caught
laughing.
up. Don't get caught up in what exactly is going on with your own house or what the other house. You got to look at what that area is doing. So let's talk about this
And when in time, because things are changing so much. I mean, not as crazy as like the last couple of months. Things are a little bit more like every 2 weeks, I would say, not every week. But what happened like 2 weeks ago is not necessarily what applies today.
Yeah.
So keep in mind, you got to look at yesterday or even like this morning to really see where are we at in real estate.
Yeah, so I actually want to talk about a few examples at the
Yeah.
end of it, because these examples will clearly showcase why each day could be different,
Yeah.
and why if you see your neighbors sold a few months ago for a certain price, you can expect to sometimes get that price because the inventory levels are different
factors.
and interest rates are different, and these things will compile and will result in you essentially not getting the price that your neighbor got. So let's go back, Market Watch. So number of sales, 4,600. Active listings were at
18.
Close to 19,000, 18,912. Average price is sitting at over 1.1 million. And months of inventory, something we haven't seen for a long time, has gone over 4, which is essentially balanced market right now.
Which will indicate, well, not indicate, but which will make buyers feel like they are in the driver's seat.
Yeah.
And that's why I don't know why people are not.
So let's talk about this while we're here.
Okay.
Why do people in, especially GTA,
Yeah.
feel like once we have a balanced market, buyers are in the driver's seat?
Why do they feel like that? I think
Yeah.
because we were in such a seller's market, such an intense
Crazy, yeah.
seller's market, that even anything after 3 feels like, okay, I have more options and I'm in control.
Yeah. This is so funny to me
Yeah, I
because
know.
this, even right now,
actually
we see
crazy.
it. Yeah, like, I mean, you're still getting showings and buyers are coming there like, oh my God, no. Like, you know, they're lowballing these homes sometimes,
Yeah.
which is like ridiculous. But this is what it feels like. We've been in such a prolonged seller market.
Like a pressure cooker.
Yeah, that every house was getting multiple offers, that right now, once people see, okay, listen, this house has been on the market for 3 weeks, now let's go lowball it, which is...
3 weeks is a short amount of time. That's not my recommendation, but I do recommend taking a poke at it.
Yeah. No, I mean, I'm just saying, like,
Yeah.
you know, once, I mean, exactly, like, at 3 weeks, in my opinion, that's not long enough. Like, if you want to really go and test someone, you got to be around 40 days. And
Things are really sitting for about 30 days when they go and sell. And that leads me to my next point, which we did want to discuss, is, you know, if you're listing a home, how many days on market do you think you're going to sell in? And also, how many showings is going to transpire in you getting an offer and then in turn getting the house sold? And we see it being somewhere around 12 to 15 showings. So if you're on the market for 2 weeks or 3 weeks and you've only had 2 showings, something's wrong with your price or your marketing strategy or your agent, but the price necessarily needs to go down.
Yeah.
And so
that is a really key point. Yeah. So this is why ahead of time having the strategy worked. So how many days should your house be on the market before it sells?
And depending where.
It all market dependent. And how many showings should you have? Because even when the market was hot, we would get, let's say, 30 showings on a listing. And if it's not sold, then you got to go back and look at the feedback that you've been receiving for the 30 showings, what's going on, what the problem is.
What's next door for sale?
Yeah, if the feedback is about an issue in the house, you go and fix that issue. If everyone's fine and dandy, then you got to look at what's going on in the neighborhood. Then probably the next big thing is your pricing. So you got to fix that pricing.
I say it's always price. I'm tough like that. I'm
for
like,
sure.
It's the roof, it's price.
Yeah, so you have to look at that. The other thing also to look at is if the average days on the market, let's say, for that area that you live in and that product type. Let's assume you live downtown, you live in a 2-bedroom, let's say ice condo. Let's be specific with that.
Why do you do that, Nima? Can we get in trouble for that?
No, I just want to give a specific example. So if it's a 2-bedroom condo in an ice condo that you got probably like 30 competition.
I'm triggered by this scenario, by the way.
And you got the average days on the market hovering around, let's say, 35 days.
It was 67.
And an average price of sitting at around like 750. If you're priced at 800 and you're on the market right now at 60 days, then listen, you
Something's gotta give.
Yeah, you gotta
and if you want to be the first to go, you gotta be the lowest price.
Yeah, so this is exactly my point. So if you want to be the first sale that happens in that condo, then you got to look at what do you have different. Okay, you got the CN Tower view. There's probably another 40 condos around that area that have the same view. Then what's the other factor? All the units, 2 bedrooms there's like probably like 4 or 5 floor plans. Yeah, but they're very slightly different. So your unit is not going to be unique. Unless it's unique, then you got to figure out, then you're going to be down to the pricing. So if you want to be the next condo selling, you got to be the best price and the best looking condo out the gate. Otherwise, you're just chilling in the market for no reason.
Agree. And you want to be that next sale because you set the price for the next sale. The last price sets the price.
Exactly. So a lot of times we come on the market and we talk about, okay, let's price this house.
When we start using our hands, that we mean business.
Yeah.
Like this is
really
like things are happening.
This is really important because we, as a team, we never pick the price well before
like
listing.
Literally right before.
A lot of people go see a seller like 2 months before, sometimes a month before, even like 2 weeks before. They're like, okay, this is the price. Like, I don't see how you could do that in a market that's so volatile. We pick the price a day before going on MLS. Reason being, what's been sold could affect your price. What's on the market what's on the market at that point will affect your price. Picking a price is not just picking a random number, it's an art. Sometimes people are like going with, like, for example, $9.99. Well, sometimes it could work, but you got to see why it works. Sometimes having a flat number, like for example 1.1 million, will have a better effect at going at 1,000,099. Like, it just doesn't make sense. Like, yeah, if you're going at 1,099,000, like, just make it at 1.1 because you got to see what's around the area. You got to be priced correctly in competition with the other units. So that is one of the biggest factors of going on the market and be able to be competitive. Otherwise, you're going to sit on the market and you're going to help the other listings sell. This is so key. If you're not priced right, if you're not looking your best, as in terms of listing,
you're not just online dating. Just saying.
Gonna say it again. If you're going out the gate with the listing, if you're not priced right, and if your listing is not presented well, you are gonna help other listings sell. So my opinion is, and I've told that to many clients, do not go list your home at a crazy number and just be there for the sake of someone may buy it because I think my house is worth this much. This is why you hire an agent to tell you some things you don't want to hear.
And it's hard even for us to have those tough conversations
Well, yeah,
sometimes
it
and
hasn't
break
been
the bad
fun.
news.
Yeah.
I mean, just today we had a call with a client doing a price reduction, which, you know, we didn't do for a long time, and now we're doing a little bit more of.
And the reason for that was
tighter windows.
Yeah, the reason for that is, first of all, when you go on the market, there are certain things outside your control. So that's really important I want to talk about.
Yeah.
When you price a house, you go based on the information you have at that point in time. So you know what's on the market, what's been sold. When you go on the market, then
things are changing.
Things are changing. There are things we can't control. If someone comes on the market below the price that we're listed, then
curveball.
Yeah, like you can't control that. And if they sell, then okay, you know what? Maybe one sale we can try to avoid, but the next sale comes around that price, then you got to lower your price. So you got to be very careful of how you're pricing it. And if you are coming in this market, in my opinion, which is not going up, and you're kind of trying to go above what the actual value is, you're taking a risk of sitting on the market and a chance of actually selling below what you could have sold 2 weeks before it.
Agreed.
So
I second that.
That was a lot of venting. Oh my God.
You got it all out?
Yeah, I know.
Good.
Continuing with the market watch, let's look at what's been happening in the last 12 months. So last September, the average price was at $1,086,000. So right now we're sitting at $1,119,000. So we're up in terms of prices, although the inventory has built up. So right now we're at over 4 months of inventory, which in my opinion is really good because it makes it easier for people to choose from and be able to negotiate a better price given the interest rates are so high. So if you are a buyer in this market, you shouldn't be sitting on the sidelines saying, oh no, I'm not gonna go buy because the interest rates are high. You gotta look at the savings you are having. And all it comes down to is, are you pre-approved for your mortgage? And two, can you afford the payments?
You stole my line.
I did steal your line.
That was a question.
Sorry, I stole your question. My bad. So, but this is so true because we see it day in and day out. A lot of people are sitting on the sideline, and we've had people that got priced out. Reason being, they were pre-approved. I had a client that was pre-approved. They were in the fours, like 479, 489, and all of a sudden now their pre-approval expired because they took too long. Now they're pre-approved at 6.59.
When he says priced out, he doesn't mean because the prices went up. He just means because the interest rate
the affordability came down.
And so the
they
payment
they could have afforded in the I think in the 700, 750-ish. Now they're well into the sixes. They can go over 700, and that poses a problem because back then they could have got something they liked. They just didn't pull the trigger fast enough. Now probably they can.
I think because people are waiting for inventory to have a surplus.
Yeah.
And I think they're waiting for prices to come down. But the question is, are you pre-approved? And are you qualified? Are you ready? And do you have a need to move? If those answers to those questions are all a yes, then you need to make the move. Because if you can afford the payment, the monthly payment, that's all you should be preoccupied with.
And I
Don't wait for the prices to come down, because you have to remember what is happening in that environment. If you take a look at when prices are high, what's driving the prices to go up? So if you're waiting for the prices to go lower, you have to consider, what does a low price environment look like, and what is driving that factor? And what is driving that factor is interest rates. So if you're stuck after when the prices are going to go up, when they decide to hold interest rates, you still have a high interest rate environment, and now you're stuck in a high price point environment, probably going to leave you without a home.
Yeah, so that's exactly what I want to talk about.
There'll be more inventory,
yeah,
but you won't be able to pull the trigger.
So this leads me to the dot chart, because
that led you there?
Yeah, this is really good, because when we had the slight hold in the interest rates back in April and May, I mean, in January they held it, things started to pick up. We thought towards the end of February things were getting crazy. There wasn't that much inventory. So right now we're clearly seeing this. In May, we hit the peak of the market, which I think it's going to hold for this year. That's going to be the peak of the market for 2023. And we were close to almost 1.2 million. That was due to the fact the interest rates you could get a 3-year, I think, around 4.79. So you didn't move at that point. Now you want the rates to come down. So
You need the rates to come down.
So if they held their rates only for 4 months and the prices went up almost 20%, what do you think it's going to happen if they actually decrease the variable rate by 0.25? Like the prices aren't going to stay the same. It's going to shoot up so quickly, you're not even going to have time to pick a home. You're just going to go run, buy something you don't like.
Not negotiate.
Yeah, not
do an
negotiate.
inspection.
Yeah. And
I don't think people are in a position to not put a financing condition.
that is so true. That is so true.
Not in this environment. I encourage all of the buyers to put a finance condition, and sellers are a lot more open to it.
Yeah.
They're not like, oh, drop the condition. I think they want to go through the due diligence so that they have a little bit more certainty.
I'll give you a good example. Like we bought an assignment.
Times, yeah.
We bought an assignment, and I know builders are not this flexible with these conditions and timeframes. Like the assignment deadline passed because of the financing clause. They still honored it. They're like, okay, now I think like they might have charged the seller like a few $100 or something. I can't remember, but the whole thing is they know if they're assigning a unit, they're better off giving this unit to someone else that can afford it and is actually approved. Yeah, and they can close on it. So this is really important to look at. So this is what I really want to talk about is when we're looking at a chart like this. So if you are waiting to buy, which right now we're around here, at the end of the chart, we're here September, August.
Which is a lot of people, like a lot of even our clients are like, oh, we're going to wait. Like they have this real chill approach to the purchase. And they're great that we prep them and they're in the market. So they are in a ready position, but like,
so you want to be buying, exactly. So right now, I mean, August was a great time, in my opinion, to be purchasing, but there was a lot of uncertainty about the rate.
Yeah.
So would you want to be buying, and I think we're going to be like going.
Why does it even matter if you're buying and closing before the rate? It doesn't matter.
No, I'm just saying like a lot of people that waited, and that was August was a low point in terms of prices. Would you want to be buying right here that I'm looking at, or would you want to wait till rates come down and like we have a situation like what we had beginning of 2022 when everything peaked and buy then? So
honestly, I'm going to say something and you're not going to like it, but if that's really your train of thought, then you should purchase something and get a variable mortgage. If you're so concerned that the rates are going to drop and you're so confident that prices, that's what you should do.
Yeah, it is that. Yeah.
Get a long closing.
Yeah.
Secure a low price.
Yeah.
And that's it.
Yeah.
Get a variable.
That's true.
Take the gamble.
Yeah. And talking about long closing, how do you get long closings? Assignments. This is so key because this is what I'm telling a lot of people that are looking to invest right now. If you want to buy right now, you don't want to get the mortgage today's rates, assignments are the way to go. I mean, some of the assignments we're doing, they're closing next June, July. Probably the rates are going to be much better than what it is. God knows, but I think it will be.
The best deals are the ones closing in 30 days.
But still, no. But like still,
price-wise.
Price-wise, yeah. The good deals, yeah.
But do you see why it's important to highlight that?
Yeah. So let's talk about that right now. So if you want to take advantage of a deal that's really like rock bottom prices, then you got to find a deal that's like literally 30 days before closing. You got to have your financing in order, maybe buy it cash. But even then, if you are picky with a, let's say, condo that you want, and a lot of people are right now looking at Nobu, for example.
Yeah.
Listen, look at what you want, find a unit you like, and you're way ahead of the market because you're buying it right now still, and you're closing probably, what are we, next June, July they're closing?
They're closing in May in the second tower, and the other ones are starting
closing or no, that's occupancy.
Yeah, occupancy.
So they're looking at probably next summer or September, like probably in a year from now you're going to be closing.
A good year out.
So these are like opportunities that you should be thinking about it rather than, right now the rates are high. Okay, so this is a way to like prolong your, because this is like, you're not getting the mortgage right now. You're just showing your approval, and paying down the deposit, and that's it. A lot of times they're not even in profit. Like,
they're at a deficit.
They're deficit. Sure. So that's a whole other concept to talk about assignments because that's a beast on its own. But if you're looking for investment, reach out to us. We'll talk about assignments. So just looking at the dot chart, I think going forward for the next couple of months, we're probably going to be wobbling around the same price of 1.1. I don't think we're going to go over 1.2. I think we saw the bottom of the market.
Below, like drop below $1 million, I don't see it.
No. I think we saw the bottom of the market. I think we saw the top of the market. We'll see what happens again,
and
end of October.
And we'll forever be seeing the top and the bottom.
Yeah, exactly. I mean, like, listen, like, at 2017, I thought those prices
You
were
were
crazy.
traumatized.
Yeah, and then look at what happened last year, like 1.3 million, 1.338 for average prices.
Fun
Bunkers.
fact, Nima gets PTSD if you talk about 2017. So when
Yeah.
he looks at these charts, it's no kidding that we don't really
Shows 2017
highlight the
anymore.
2017 stats.
Yeah. So let's talk. So right now we just talked about the market watch. I want to briefly talk about months of inventory, just so that I show the graph, because
Yeah.
again, that will show why you want to take a look at months of inventory. Otherwise, things will not make sense to you. Let me go here.
If you've been watching us for this whole time and things still don't make sense, guys, you need a one-on-one call.
That is true. So this is the graph that I've always talked about, and if you are looking to purchase, this is you should be looking at, because this will indicate how competitive the market is going to be for you buying. So
First of all, if you're looking to purchase, you should be actually looking to purchase right now.
Yeah.
Because you need to buy low, sell high.
yeah, that's the basic of it. But the
Basic.
reason for that is this chart. So months
Yes.
of inventory. What months of inventory is the fact that if no new home comes on the market, how long it will take to sell the existing inventory of homes. So the lower the number it is, the tougher it is to buy a house, and that's when we see multiple offers. The higher it gets, it becomes a buyer's market, and you're not gonna see any multiple offers, and you're gonna see a lot of inventory on the market to choose from. So when we're around the 4, that's the balanced market, and that's something we haven't seen in a long time. So this is actually a really interesting graph, because as we're looking at it, this has been the highest months of inventory we've had since January of 2017. This is
There, that's that number.
yeah. So this is crazy. I mean, we haven't gone over 4 since then, and I thought we were like close to it back in
What were the
2000.
interest rates back then?
So interest rates, I think they were hovering around 3.5, 4.
Okay.
Yeah, yeah. That's
So prices held pretty decent.
so the reason 2017 market kind of stabilized wasn't because of the interest rates, it was because of the policy that the government put in.
Yes.
So the foreign
Foreign
policy
borrow, yeah.
and then the 16 points fair housing plan. So those things really changed the
market down.
mentality of the speculation. So people stopped buying because a lot of speculating was happening in the market. But what we're seeing right now is the highest level of inventory we've seen since 2017. So if you're
and
looking
it's
at
past it.
it's the highest we've seen. So again, I want to look at this right now to pinpoint exactly what happened. So as you see the bottom of this graph in April, May of 2023, you see it bottom down at around 2.5 months of inventory, and then it shot up. In August, we were at around 3, and then right now we're at over 4. So what does that tell you? So if you are in the market to buy, you got plenty to choose from,
Yeah.
and you should be actually looking. Look within your price point. I know a lot of people right now are talking about, okay, you know what, I can't afford to buy the house I like. It's out of the price point. Why not buy something you can afford, rent
Get
it
into
out?
the market too.
Yeah, just rent it out. Just rent it out. Like, I was talking to a client recently, and they can afford only a 1-bedroom, maybe a 1-bedroom plus den, and in an area that they're not too fond of, right? I'm like, okay, buy it. The rental market is crazy right now. It will cover all your expenses
Yeah.
probably. Even if you're out of pocket, it's going to be maybe $100. We ran the
Which
numbers.
is a forced savings, right?
Yeah,
Because
exactly.
you're putting that towards your
Principal. Yeah.
Thank you.
So if you're out of pocket $200-300 on a condo, for example, that you're renting, don't look at it as you're losing money. You're cash flow negative, but
Right. Two
that
different
money,
things.
yeah, the money you're grabbing from the tenant is paying for all your costs, your expenses. That's your interest, property taxes, maintenance is covered. If you're paying $200 out of pocket, that goes towards your principal. That's saving. That's going to come out once you sell the house. So
And regardless, I always say, even if you're out of pocket, let's just say $100, $100 a month, 12 months is $1,200. Guaranteed, your condo appreciated and absorbed that $1,200.
Yeah.
So don't be like, oh, I'm out of pocket. Most investors don't share this information. All of them have been
Yeah.
out of pocket at some point in time or the other.
100%. A lot of people that are buying condos, especially in the first year or two,
Mortgage, no
in the
mortgage,
last
out of
few
pocket.
years have been out of pocket. But once you build up that equity, the
Yeah.
rental rates have gone up, then you will see that cash flow come in. And again, it's more about building the equity than
And then
having
pulling
two,
it out
300
and
bucks,
yeah.
in your pocket at the end of each month. So that's something to look at. Let's go through.
But don't bite off more than you can chew.
100%.
Yeah.
And while you're at that, it's very important that right now, if you can afford the monthly payment, it's fine. Also think about what if it went up another quarter of a point, another half a point. I mean, do I think it's likely? It could happen, but like you have to be able to afford it, because the worst
Don't
thing
go
that can
beyond your
happen
means.
is that you have to sell a property in a short period of time, and that's
The
when
worst
you're
case.
gonna lose the most. So just
I
2
find
cents.
those the toughest clients to take on, because you have like an enormous amount of pressure to make sure they get the most. Like,
Yeah.
yes, we want the most for our clients always, but in those situations, I find it like really tough.
Yeah, it's not fun, and like a lot of
Like I
times we
take
like
it
to help.
personally,
Yeah,
like it's heavy.
it's tough. Yeah, it's tough. It's not fun, but sometimes
You gotta do
it
what you
just-
gotta
it
do.
happens. So let's go through
Stop, my
average
fave.
prices. So let me just talk about the fact that I like to talk about like detached and condos just to put things in perspective,
Yeah.
and I want to talk about month over month because a lot has happened month over month.
I like month over month. Year
Yeah.
over year for me is like falls a little flat.
So right now in Toronto, the average detached is sitting at 1,724,000. Last month it was at 1,635,000. So it has actually gone up. Semi-detached prices have gone up by about like $45,000 from 1,235,000 to 1,282,000. Townhome prices have gone up as well from 971,000 to 992,000, and the condo prices surprisingly has gone up from 724 to 732,000. And I'll tell you what the reason for that is. A lot of people are buying that two-bedroom condo that they couldn't afford,
100%.
and that has pulled up the average prices in condos. We've seen a lot of condos that last year they were trading downtown Toronto for, let's say, around $1 million. Now they're selling probably around low 900, and a lot of people are
Probably
buying
people
those.
that are upgrading because
A
they're
lot
like,
of people
I'm
are
taking
buying
the hit
those.
on my one bedroom condo, but I'm able to upgrade.
So this is, people look at this price and they're like, oh, how come I can't sell my one bedroom plus den condo downtown
Saturated
Toronto?
market.
The reason is there are way too many one bedroom and one bedroom plus dens right now in the market because investors are not buying them because
And I don't
first
know
of all,
why they're not buying them as
because
much. If you're investing, you should be having a healthy cash flow.
Well,
Cash deposit.
yeah, so if
You
they don't
should.
have that and they buy this with a high interest rate, they're not going to be cash flow positive. A lot of cases, we had a few clients.
One
you're gonna be able
bedrooms are going at $2,400 a month though. So if you can get it for a decent price,
Yeah, you got to get at
you're
a decent
breaking
price.
even.
Yeah. So that is the key thing, and that is not a lot of condos are going to be in a situation that you buy them, let's say around 550 for that monthly rent to cover majority of the expenses. But people are buying.
Have you seen the one bedrooms right now? They're all like well underpriced.
Well, no, they have to
Well
be. Yeah.
under. So you can definitely
Yeah.
pick up a
There are-
great investment right now today.
So
Like even Florida, like I look in Florida all the time, and like the prices have softened quite a bit, and they're
well, I
behind.
mean, like we were
so they're
looking
gonna
at
be going
River
down.
City.
Yeah.
River City, for example, a condo that sold back in May for around 535, 540, now is selling for 490,
Yeah,
and the rent is 2,500 there.
and no parking.
Yeah. So again, so this is with the average prices in Toronto. Average prices in New York, different ball game. So the detached has actually fallen down slightly from 1,684,000 to 1,684,000 to 1,664,000. Not a lot. Semi-detached has come down by about $50,000 from 1.2 million to 1.15, and townhomes went up from 1.17 to 1.2 million. Condos are almost flat from 704 to 717. Not a lot of condos there.
For pricing, if you look at what's happening in New York and Toronto, they're not too far off.
No.
Which means you can like kind of parallel
Yeah.
be shopping in both at the same time.
Yeah, and that's why the prices in Toronto kind of went up because a lot of activity happened in the detached market, specifically due to the fact that
In all categories.
prices came down. Going back to just average prices, I want to compare GTA, Toronto, York, Mississauga, Durham, and Oakville. So month over month, the average price in GTA is up 3%. The other area that's up is Toronto. So the Toronto prices have gone up by 11%. They were at about $1 million average price point. That's condos and detached and all the things in the middle. Right now they're at 1,119,000 as well, very close to the average price of the GTA, and they're up 11%.
I don't want people to be like, are these people out to lunch? I want to be very clear. We're looking at like the contrast of August
To September.
We are now in October,
Yeah.
and this can change by the time you watch this episode. So just keep that in mind. Prices are up from August. August is traditionally a slower month. September, things kind of started kicking up into normal routine.
Yeah, that is to take into
Yeah.
consideration. And again, this is average prices taking into consideration everything.
Because I mean, the jump is high. I don't want
Yeah.
people to think, oh, prices are like, prices
Yeah.
are going up like crazy. That's
So
not
the reason
case.
for the price has gone up, I just
Yeah.
explained it, is because a lot of detached homes traded hands.
As
Not a
well.
lot of condos have traded hands. And this is why we see Toronto month of inventory being around 4.35 months
Yeah.
of inventory, because there's a lot of condos that are not sold and they're just piling up. York
Piling up.
region, Mississauga, and Durham have had a negative price from minus 1% to minus 3%, and Oakville went up actually by about 4%. So that's in terms of average prices. I think
Yeah.
it kind of makes
Self-explanatory.
sense. I want to talk about a news article that was on Toronto Star.
In the
which,
news.
Yeah, which is pretty much interesting to me, because it says how downtown Toronto home prices changed by neighborhood in September.
When they say neighborhood, they mean like downtown, all the boroughs?
No, East, West, Rosedale, Annex type of thing. Yeah.
Okay, all the things.
Yeah. So home prices averaged on the core East. So we're talking about around Don Valley Park, DVP.
Leslieville, that area.
Yeah. They went down 2.4% from August to September. Core West, let's call it probably around Kings West area.
Bathurst,
Yeah.
Spadina.
Went up by 5.1% month over month. And funny enough, Rosedale and Moore Park prices went up 134%.
Can I tell you something? Because I went somewhere yesterday and I heard that a record was created. I think it was like 17 million for a condo just this month.
Pre-construction or
this week.
resale?
Resale.
Oh, wow. I got to find that out. That's
I know.
interesting. And that
I
was over
should've
there?
pulled that
That was
up.
in Summer Hill?
Yeah, it was like Rosedale, like that neighborhood.
So the reason,
Crazy.
so that's what I wanted to talk about here too, because in Summer Hill and Moore Park, not a lot of inventory happens, not a lot of sales happen. So when
And
you
it's
have
an affluent neighborhood.
yeah. So and they were the only couple of
Sales.
neighborhoods that didn't go down as much during this whole year.
Mm-hmm.
But when you have 2 or 3 sales happening that are really high up, let's say if you have a condo that sold for 17 million and you got a total of, let's say, 9 sales
No,
or
that's
7
how
sales,
that price-
yeah, the price just goes up. So
You
take
didn't
that.
know that, eh? I just helped your...
No, that's kind of out of my price point. I'm looking at
Same.
$1 million condos these days. So Annex and St. Clair went up by 5.2%. So, I mean, as you can see, downtown Toronto, a lot of areas month over month have gone up. August was a slow just because no one was in town. First year out of COVID, everyone was on vacation. So a couple of points I wanted to talk about. What do you tell people when they say, I'm going to wait until the rates come down?
Well, it depends what conversations were had prior.
No.
So what do I say to someone that says, I'm going to wait? My question is why? So what are you trying to achieve? You know, how much money are you trying to save? Either is it on the payment? Is it on the total purchase price? How much down payment do you have? What are we working with? You know, do you have a pre-approval? Like, there's so many questions that I ask just to see, like, okay, where are we at in this
Yeah.
process? So I can prepare you, A, and then B, what are the next steps we're going to take so that you're ready whenever we discuss whatever happens, right?
Yeah.
Do you have a different approach?
No, I think that's good. But my only question would be that
Yeah.
right now the opportunities,
Yeah.
you're gonna wait till rates
Till
come
what?
down.
Yeah.
That the prices will shoot up way faster than you're saving on the rate.
I agree.
So you're gonna be buying the same property 2, 3, maybe even $500,000 more if it's a detached, few months after the variable rate comes down. So if, again, going back to the point that you had, if you can afford the payment,
Yep.
and let's assume if it goes up slightly, you can still afford it, you should be buying right now because there are opportunities.
We have this conversation.
Yeah.
I think I have this conversation with every single buyer that I take on. But I also have this conversation like weekly when I go out for dinner or to an event. It's like hot topic. And it's on repeat for me what I say. You know, it's like, what are you waiting for? And I think people are waiting for like the market to crash and plummet. And like, I hate to break it to anyone, I don't see that happening.
I mean, like,
We're
listen,
in a
like,
recession right now. I mean, you feel it everywhere you go. The grocery store, dinner, anything.
it's all about the fact that whether or not anything crazy happens again, because you don't know. Like, if everything is normal, not, but right
Unforeseen
now, like, there's a lot of things happening in the world that you can't really foresee what's
As
going to
well.
come down the pipeline and affect the real estate market.
Yeah.
But the whole thing is,
Do you think the market's going to plummet in such a way?
if we're going like this, no. If everything stays
What
the
do
same,
you
nothing.
think would need to happen?
Well, I mean, like, if we have a pandemic, let's say, another
Again.
pandemic that happens that...
Which was the reverse.
Yeah. Like, I mean, short term, like, not...
You know?
If COVID again picks up, people know this, they've seen it already picked up, no one's talking about it, so I don't see that being an issue.
Yeah.
Something else that happens, or if some sort of a war breaks out
Agree.
that really affects the world economy in a way that there's shortages or whatnot, then these things will affect the real estate market. But right now, as it stands, I think if you're in the market to buy, is a good time. But this is not the same thing, I would say, if you are trying to cash out of the market. If you're selling and buying in the same market,
You're mostly affected if you're trying to cash out, in my opinion.
yeah, you are going to be. If you
The
are
most affected.
so if you are cashing out, it is
Unfortunate,
tough.
yeah.
But if someone comes up to you and asks you the question,
We're
listen,
role-playing?
Yeah, no, I just want to know like
Okay.
what the answer would be. Dad, listen, you know what? Neighbor got this price. I want this price. My house is more renovated, so at the very least, I want this price that this person got
First,
back in
when?
April and May.
Yeah.
April and May.
When? I had a client, this is like, forgive me for repeating this, but I had a client, we were negotiating for a purchase, okay? And he had the audacity to tell me, my uncle, had an offer, didn't go with it, and then 2 weeks later got this immaculate offer. And I said, okay, like when was this? He was like 20 years ago, but like, don't worry about it. And I'm like, are you out to lunch? Like, are you okay?
Devany getting sassy these days.
No,
Yeah,
but-
well, yeah. I mean, listen.
You know?
This is
20
our
years ago,
job
like
to
last
educate.
month
Yeah.
is not even relevant to me.
Yeah.
20 years ago. So my big question is always like, when?
Yeah.
When did this happen? What were the market conditions? And not only when, because it could have been like 2 weeks ago, but what was happening 2 weeks ago?
Yeah.
How much inventory was there?
Yeah.
Absorption rate, how much of that inventory was being absorbed?
Yeah.
How much of it actually sold?
So I'll give you a good example.
Because a lot of listings are being suspended as well.
There's a lot of suspensions and termination. But here's what I would answer to someone asking me, I want this price for my home or I'm not selling, right? My answer would be
Don't sell.
Well, no, I will tell them, I always tell them the value. So I say, listen, let's use this as an example. This is a real example. A condo that was sold just over $1 million, around $1,050,000 back in around April, May. And right now, those condos have dropped down by between 13 to 14%. And probably if she wants to sell quick, she has to price it
Does she
really.
need to sell? That's
Well,
the
I
other
mean, that's
question
their
I asked.
situation. Yeah, they want to sell it right now.
Do they need to
Yeah,
sell?
they need to sell.
That's
yeah.
different.
So with this situation, I'm like, okay, so if you want to grab that $1,050,000 price point, then, you know, you should sit on this property for the next, in my opinion, 2 years,
Yeah.
because assuming the historic average of condos going up by about 6%, that's 12%. You're looking at September of 2025 probably to get this price, and realistically, this is what I think they're going to get. I had
And
another.
there's no certainty still. This
No.
is just like a plan, and we're hoping to get that.
Yeah. So
result.
let's just assume, yeah, like I mean, like if the property, let's say, was $1 million, right now you can get around like $880 for it. And I told him, I'm like, you would probably next year this time get around $950. So you need to decide right now whether or not you want to sell right now, or probably be ready to hold for 2 years and
Yeah.
see what happens.
And what's the lesser of the outcomes that hurts the least?
And when, in my opinion, when we break it down like this, people will realize what's going to happen.
Yes.
I mean, like we've had condos appreciate around like 13, 15% in 1 year, but I can't tell you this is
That
going
it
to
will
happen
happen.
next year. I don't see this happening in this rate environment. So this is what I think people should ask themselves, and this is what, as agents, we should tell people,
Yeah.
listen, here's the value. Maybe
Here
we
are
can
your
price,
options as well,
maybe we
right?
can price it a little bit higher, but this is the value of this place. So if you want this, let's say a $900,000 condo to be at $1 million, we're looking at a year and a half to 2 years out. So you decide, like, let's not list a property overpriced and add to the inventory of the homes in Toronto. And
I actually told a client, like not long ago, you're gonna get mad at me. I was like, I'm not a magician. Like,
no, it's
I
not
wish
like,
I can get you this
yeah,
price.
yeah. Some of the prices
But I'm
are
not a
not
magician.
realistic, so it can happen. So with that being said, anything else we gotta add?
No, I think honestly we went through quite a bit. Touched on the buyers, touched on the sales.
This is probably
Things that
our
are
longest
I know, sorry, we
reality
had a
check.
lot to dump out here.
Yeah,
It's like,
see, I take a vacation, I come back, and this is what
I
happens.
get you coffee, you're wired.
That's it. I think this is the coffee was it.
The call.
So I feel a little wired after the coffee, but I think we're gonna go do something after this. But on that note, thank you guys for watching, and make sure to watch the episode that we had last month with Jeff Slide. I'm talking about pre-construction because there are a lot of good deals in pre-con, especially in Pickering. We had condos selling pre-construction,
Oh,
condos
yes,
below
Pickering Town Center.
$1,000 a square foot. Insanity. Like, I've never seen prices like this. And right now in Toronto, we have prices below $1,400 a square foot for pre-con. So definitely watch that episode. And if you have any questions, feel free to reach out to us and we'll be happy to answer them. Have a great day.
Thanks for watching.